Hi friends, welcome to Adda 24/7. We are in MCQ series for BFM and today we'll be covering an important topic under international banking, and the topic is LCs, letter of credits. Very important topic. Very means if you understand LCs, you'll able to solve almost 15 to 20 marks, roughly 15 marks at least in your exam. So let's start without wasting the time. Before that, you must know what the syllabus is, actual syllabus for your CAIIB. The syllabus is here, it starts with, there are 4 compulsory papers: ABM, BFM, ABFM and BRBL. Okay, for those who don't know, kindly pay attention. These compulsory papers you have to give it, there's no option to this, and you have to clear it also. Then there are electives. Electives means you have to choose between these, one of them between these: rural, HR, IT, central banking and risk. Okay, so what does it mean? You have to clear these 4 subjects and one of these. Okay, now I'll discuss some important points about all these 5 subjects. Okay, firstly, remember this negative marking has been removed, so that is out now. Okay, there are subjective questions which means you will be given a window for inputting the answers with the here. There will be some questions which won't have any options, only question, and then you'll have to input the answers on yourself. Okay, so there will be a virtual keypad given to you and you'll have to input the answers into that. Remember this. Okay, these are new types of questions which have been added. Now coming to this chapter, this subjects ABM, BFM, ABFM, BRBL. Remember, these are 3 of them are purely numerical based: ABM, BFM and ABFM. Purely numericals means we'll have at least 30 to 40 marks of numericals in ABM and BFM and at least 20 marks of numericals in ABFM. Legal, there are no numericals as such. Okay, so you have to focus on numericals and case studies. Now case studies, if you say, they're generally a rule of roughly 50-50. In ABM sometimes has lesser case studies, but generally we do have 50-50 case studies. You can take it for study purpose at least. You must consider that it is around 50-50 in all the papers. Okay, means roughly 10 case studies. Sometimes in ABM you get 7, in BRBL you might get 6 or 7, or in this ABFM again 6 or 7, but you, for your study purpose, you must consider it approximately 50-50. Okay, then in ABM and BFM, see here, today's topic is on BFM, so I'll discuss mainly on BFM over here. In BFM, module A and B are the most important topics. What does it mean? It doesn't mean I must leave C and D. Why did I say A and B are most important? Because ABM is this module A is completely international banking. It means forex, pre-shipment credit, post-shipment credit, then roles of various RBI, ECGC, all these institutions. You have numericals in this, you have case studies in this, and in the risk management module B, this is totally related to HO banking. Imagine you are working in treasury department in the HO and then do it. So that is the basic rule behind this. Okay, so risk management, again, now the importance of risk management lies in module C and D. So what is the importance? See this. If you understand module B correctly, module C and D will be easier for you, because module B forms the base of module C and D. Okay, so that's why focus very rightly on module A and B. Once you are through in module B, remaining 2 modules will become easier for you. Okay, so now you got some idea about how to study in BFM about this. Okay, whenever I'll take for ABM, I'll give it the same for the ABM. Okay, electives: rural, HR, IT, central banking and risk. Select that elective in which, number 1, if you have worked in it, number 1. Number 2, if you have studied something about this. If you are totally new to any subject, don't select it. Many times I have seen students, they are working in retail banking and they wish to have their career in IT. Banking means banking IT. So they take IT. That is not the right way. Okay, select that elective in which you are conversant with. So that's why select, if you are working in rural retail banking, select max to max rural or HR, because that's the easier one. In fact, it's up to your choice. I can't force anyone. Okay, I'll just give you the hints, what all can you do and where all can you score, right? So coming back to the topic now, say this, what is the schedule of the session? See, the schedule of the session is LC flow and funds flow. See here, whenever we have any LC transactions, there are three types of flows happening. One is the LC flow, second is the funds flow, and third one is the money flow. Okay, so I'll be dealing in all these three, and afterwards we'll be dealing in objective questions. Okay, so let's start. First, see this is money flow. Now this reimbursing bank, this is a part of money flow. Okay, before that, what will I do? I'll cover some LC flow with you. See this is a LC flow actually. Now what do you mean by LC flow over here? Okay, it's like this. See, this image too much busy, because this is the you can consider the Bhagavad Gita of your LC, because if you understand this slide, everything you'll understand it immediately. Okay, so now how does this move actually? See, this is the applicant's bank or buyer's bank, and this is a buyer actually. Okay, and this is a buyer's bank. So what happens actually? See this, suppose this is the buyer. Let's say I am the buyer over here, okay, in USA. Okay, let me change this color. Yeah, I am the buyer, let's say, in USA. Okay, and there is a seller in India, seller. Okay, so this seller from Indian perspective will be called as what? He will be called as exporter, right? Exporter. Then this guy will be called as what? Importer. Okay, now what happens? How does the LC flow take place? This buyer and seller want to do business with each other, but they don't know each other. So as they don't know each other, they won't trust each other. Simple. But they have to do the business. So what happens? There are few problems. So what are the problems? First, main problem is of the seller. The seller feels that, suppose if I send the material to this guy and this guy doesn't pay later, then what? So this is also one point, and it's a valid point. Now second problem is from the buyer side also. So what is that buyer side problem? Buyer side, you might think, what is the problem to the buyer? No, there is a problem to the buyer. The problem to the buyer is, see here, it can happen like this also. If buyer pays an advance payment to the seller and the seller doesn't send the goods, then what happens? Right? Buyer gives advance payment, advance. This can, see here, we always think from the point of view of exporter only. But importer also has a problem. He pays the advance payment and seller does not send the goods. So seller goods does not send. Number one. Or second point is, seller sends the goods but of lower quality. Now what happens? Here, these are the two problems, right? So this buyer and seller both don't trust each other. Now this is the basic problem. So what do? In that case, there is a way out. So what is the way out? See here, they'll open an LC. See this, they'll open, let me remove this now. As you have got the problems, now we'll move on with the LC part. So what will they do? They'll open an LC over here. Means what? See this, buyer will go to his bank. Okay, now this bank is called as importer's bank or LC issuing bank. We'll just call it issuing bank. Okay, issuing bank, okay, or LC issuing bank, you can call it anything. Now he'll go to the issuing bank and tell that issuing bank, see, I'm opening, I want to open an LC in favor of this guy, this seller from India. Okay, because we want to do the business and the seller is not confident of my payment, whereas I am not confident of the quality of the goods this guy will be sending. So that's why I want to open an LC with you, from you, in favor of this exporter. Now this exporter, when LC is opened in favor of this exporter is called as beneficiary. Okay, and this importer is called as applicant. Okay, applicant. So what happens now? This buyer goes to this issuing bank, but will this issuing bank open this LC without any document? This issuing bank will ask this buyer, okay, what is the proof that you are going to do the business with this seller? What proof do you have? So that is the problem now. Now what proof will the buyer have? Here, the buyer will have one proof, two proofs in fact. The buyer, what will he do? Once if he wants to do the business with him, he will first send a quotation, or we call it purchase order, anything, quotation, or not quotation actually, PO you can call it, order, purchase order. So this buyer will send a PO to this seller. Now once this buyer sends this PO to the seller, this seller will send something, approximate rate he will send it. So this is called a generally pro forma invoice, pro forma, okay, pro forma invoice. Remember these terms, okay, in LC, invoice. So this seller will send a pro forma invoice. Now how many documents does the buyer have? Write in the comment section. How many documents does this buyer have now? One, he is having this PO, and second is having the pro forma invoice, right? Two documents, correct? So he'll take these two documents along with his KYC documents. Remember, KYC is obviously important. So buyer will take these two documents along with his KYC document. Okay, just tell me, suppose if I come to your bank tomorrow only with these two documents, pro forma invoice and his purchase order, and I tell you, sir, please open that LC in favor of somebody in let's say what, USA. So will you open only based on these two documents? No. Why? Because you will ask me for the KYC. Do you know me? No, right? Do you know that buyer or seller, any customer which comes to you, you always follow the procedures. Bankers always follow the procedures, right? So what will the banker do? Banker will first ask for your KYC documents. KYC is very important, and KYC and AML both actually. AML is the secondary part, KYC is the first part. Okay, if you are through with KYC, AML hardly happens. Okay, so this buyer will give this PO, pro forma invoice, and KYC documents to this issuing bank. Now what will this issuing bank do? Okay, will this issuing bank open the LC immediately just after getting the documents? Here, what is an LC basically? You must understand that first. What is an LC? LC is a guarantee, not guarantee actually, it's a primary mode of payment. Look at this, primary mode. Okay, primary mode of payment. It's not a secondary mode. Okay, primary mode of payment. So what happens over here? Primary mode of payment means under this LC, this issuing bank tells this beneficiary or the seller that you send these 6 documents to me. Look at this, whatever I am telling you, pay attention. You send these 6 documents to me, at least 6 documents to me, and I will pay you. Understand what am I saying? I will pay you. Now it doesn't mean this buyer will pay you or buyer will not pay you. Forget everything. I will pay you. Now what does this become? This becomes a primary mode of payment, isn't it? Suppose if, tell me, this issuing bank tomorrow gives this guarantee or gives this LC to this seller that I will pay you. Now imagine you are in this place, you are in this issuing bank's place, okay? You are here working in this issuing bank. Now tell me one thing, this seller, you give an LC to this seller, okay? Now this seller, what does he do? He sends okay, and he says okay. Now as per these documents, as per this LC, you ask for generally 6 documents. So which are those 6 documents? Sure, always remember invoice, then insurance, okay, then afterwards bill of lading, BL, bill of lading. Now this is not always bill of lading, it depends on the way we transport the goods. Suppose if I send it through the ship, then it will be BL or MTC, multimodal transport document. If I send it through air, then it is airway bill. If I send it through truck, then truck receipt. If I send it through railway, then railway receipt. Anything. This is just a transport document, okay? But generally see this, export trade 99%, 99, it happens in ship. Okay, hardly 4-5% happens in other ways. Okay, so bill of lading, bill of exchange, BOE. I'll write it BOE only. Okay, bill of exchange. Then packing list, packing list. Okay, and then COO, certificate of origin, COO. These are the at least 6 documents which are required in the export trade. At least I am saying. I am not saying all of them. These are the only documents. No, there can be documents other than this. Suppose if I am in the issuing bank, okay, and I ask these 6 documents, and 7th document which I ask is photograph of the seller. Photograph. I want a photograph of that seller. Nobody can challenge me. Nobody. Because whatever is required in the LC, the documents have to be provided with. So that's why this was just a hypothetical example I gave. Nobody asks for any photograph, right? Nobody wants to see your photograph. Okay, in business, everyone is here for money. Okay, so keep it simple. So what happens now? This issuing bank will ask these 6 documents. Now imagine this guy, seller, sends all these 6 documents correctly, very correctly. Then what has the issuing bank told? That if you send me these 6 documents, I will pay you. Now the seller will expect the payment from this issuing bank. But where will this issuing bank give the payment? Is the issuing bank doing the job on themselves? No, it is doing on the request of the buyer. So what will this issuing bank do? Before issuing this LC, it will block the assets of the buyer, right? Obviously, applicant or buyer block the assets means it might take, let's say, 110% of the FD or 125% of the FD, depending on this risk appetite of the bank. Suppose if this LC is for, let's say, $1 lakh, okay, then this issuing bank will ask this buyer to do an FD of, let's say, $1,25,000, $1,25,000, right? Because after all that, this bank has to cover their own risk also, isn't it? So this issuing bank will get an FD from this buyer or block an asset, any type of asset which can be sold immediately. So this issuing bank will get an FD from this buyer or any asset and then issue the LC. Okay, issue the LC means what? This LC, how will this issuing bank issue the LC? How will it do it? How will it do it? So while issuing the LC, what will this issuing bank do? It will do a simple step. See here. Firstly, tell me, does where is this issuing bank? In which country is this? This issuing bank is in the country of that buyer. Let me draw it again. See this, some important parts I will draw now. Not all, buyer. Here it is seller. Okay. Then issuing bank, IB. IB I will write it. Okay. So this IB is in which country? If this buyer is in USA, this IB is also in USA. Because then only this buyer will know this bank. Will this buyer in USA know an SBI in India? No, right? So this buyer will, this issuing bank will be in the country of this seller only. So what will happen? This issuing bank wants to send its LC to this seller. How will it send? It doesn't know. This seller is staying in, let's say, some remote village in India or some tier 2 city in India, tier 3 city in India. Okay, it's, let's say it's a business. It's in some tier 3 city. So how will this issuing bank send it? It doesn't know this any tier 3. Does a bank in USA is expected to know any city name or details of any city in India? No. So what will this bank do? This bank will do a relationship with Indian bank, let's say SBI. Okay, it will tie up with SBI and it will send the LC via Swift, okay, to SBI. And then it will tell this this SBI that kindly give this LC to this seller in whichever city you have. So it always takes that bank in India and checks that bank in India which has maximum branches. Okay, so that's why this SBI becomes advising bank. Advising. Okay, so this is the role of this SBI now. Advising bank. So what does it mean? SBI will act as advising means what? What is the job of this SBI? The job of this advising bank is twofold. It has two roles to do. Which are these two roles? Number one, check the authenticity of that LC. Authenticity means what? Whether this authenticity, okay? It means what? Whether this issuing bank who has sent the LC is genuine or not. That is also a point. Otherwise, what happens? This LC, this issuing bank is not genuine, it's a fraud bank. And this seller prepares this goods and sends it. And how will he receive the payment? So, authenticity of this bank, authenticity of that LC is to be checked. Okay? How does it check? It checks it through a system called as MaxSac. Okay? That's a separate part. Second job is send all the documents, means print all the documents. I would say print all the documents, all docs, and send it to the seller. Okay, print all the docs and send it to the seller. So this is another job of this bank. Okay, so this SBI will do two jobs over here, right? Advising bank. So it will take this printout and send it to the seller. So the charges of this SBI will be recovered from this seller. These are called as advising bank charges. Advising bank charges, right? So these are the charges. Now this LC has reached this seller. Now next step is, see this. What will the seller do? This seller will prepare the goods and send it via this port. See, look at this. Now I'll mark this cursor as red. Okay, so it becomes easier for you. See this. Now look at the, pay attention to this cursor. So this seller will now prepare the goods and send it through sea. Let's say, example, let's say he'll send it through sea. So while sending it through sea, the seller will have the customs check over here. Both the countries, India also customs and USA also customs. So Indian customs will issue a document called as SDF. So this SDF, when the seller is issuing it, okay, when this customs house is issuing it to the seller will get these 6 documents, the ones which I told you earlier, right? Okay, how many of you remember? Type in the comment section. What were the 6 documents I told you? Fast in the comment section. Let me see how many of you are attentive. There is a hint also on this screen also. There is a hint. Which is that hint? Type it. Correct. Invoice. Insurance. Correct. See here I have written it over here. Bill of lading, bill of exchange, packing list, COO and any other document. Now the seller has to submit this 6 documents along with some 7th, 8th, anything to his bank, Indian bank, in 21 days. Within 21 days from the shipment. What is the BL date? BL date means shipped on board date. The on board date, within 21 days from this the seller has to submit the documents to this exporters bank. So this exporters bank will act as either as forwarding bank, confirming bank, negotiating bank or nominated bank, and it will send the documents to the issuing bank. Now what is the role of this? I'll explain you in one line each. What is forwarding bank? Forwarding bank means this exporters bank will simply take the documents and send it. That is called as under reserve. Confirming bank means this exporters bank will give a confirmation to this seller that, see, on the due date, whatever is the due date, I will pay you. Now if I say, if this bank says I will pay you, what does it mean? This seller has got 2 confirmations now. One is from this issuing bank. What did the issuing bank say? You send me the documents, I will pay you. What is this bank saying? You send me the documents, I will pay you. So what does it mean? It means that this seller has got 2 confirmations. One from the issuing bank, second from the confirming bank. So that is confirmation. Third is negotiation. Means this exporters bank will say, okay, forget this, after 45 days, after 60 days, whatever this payment terms are, this bank will pay us whenever we want. But now, I will pay you right now. See, this pays immediately or before the due date. So this exporters bank will pay immediately. That's called as a negotiating bank. And nominated bank means when the name of the confirming or this negotiating bank is already mentioned in the LC, then it's called as nominated bank. So these are the 4 roles. This exporters bank will send the documents to this issuing bank. Now these documents have reached the issuing bank. Okay. Now what will the issuing bank do? Say this. This is the third step now. What did I say? There are 3 steps in LC. One was that LC flow, first one. Which one? This one. Second one was documents flow, right? And third one is the money flow. So here in money flow, what happens? The issuing bank checks the documents. Now if the issuing bank finds it correct, now there are 2 ways, okay? 2 options in fact. Issuing bank finds these documents as wrong, some mistake. So issuing bank will immediately send a message to this exporters bank saying that, see, the documents which you have sent are wrong. These are the mistakes, these are the errors, okay? So these errors, which are the discrepancies, we call it actually. The word is discrepancy, correct one. So the issuing bank will send the discrepancies and it will say, I'm not paying. But if the documents are correct, there is no discrepancy. In that case, the issuing bank will have to pay. But how will it pay? So now there are 2 options. If this issuing bank has a nostro-vostro arrangement with this exporters bank, nostro-vostro means either nostro or vostro, anything, okay? I have taken a separate session on this, kindly follow that. So nostro-vostro, then directly it will debit its own account and credit the nostro, either that way or even same for the vostro. But if it does not have any relationship with this exporters bank, then what will this importers bank do? This importers bank will send it through a third bank called as reimbursing bank. So maintains a nostro in the same bank as exporters bank like Citibank, Bank of America, HSBC, etc. Means what? These 2 banks should have the account in the same bank. So that is called as reimbursing bank. So in this way, this issuing bank will tell this reimbursing bank, kindly debit my account and credit this bank's account. So this exporters bank will get the payment. It will pay it to this seller. Okay. So that's the way money also flows. So got it now? Now tell me in the comment section, what are the names of the banks you have learned today? Names of the banks, starting from the first one. Type in the comment section. What are the names of the banks you have learned today? Let's start one by one. First one. Let me write it over here. See this over here. First one, type this. What is this? Correct. Issuing bank. What is the second one? Second name, which was over here. SBI, I gave you that example. Which was that? Correct. It is? Which was that? Let me see in the comment section. Which was that? It is? Correct. Advising bank. This advising bank. Correct. Clear? Advising bank. Now third one. Then we saw the documents flow. Which are the other banks? Correct. Forwarding bank. Then next one. Type in the comment section. Why am I giving you the answer? See this. Let me see it from yourself. Yeah. From your side here. Forwarding. Second one was confirming. Correct. Third one was, I won't show you that. Third one was, kindly show us. No, not. You have to remember. Third one was negotiating. And last one, nominated. Correct. So these are the 4 banks. See this: forwarding, confirming, negotiating and nominated. Then there is one more bank remaining. What is the name of that other bank? Remember anyone? Payment system, money, when they don't have the nostro with each other. Correct. That is reimbursing bank. Okay. So now, hope so everything is got cleared in your mind. Right? Kindly share this as much possible. We have given it over here. So what I would suggest is you join the classes. We have the paid class going on for the BFM. So join it immediately. Great details are shared over there. Okay. So these are important questions in your CAIIB exam. Remember this. It's not that simple. Now, before going ahead, download Adda 24/7 in your mobile. In this app, you will be getting number 1, premium study material plus live classes, ebooks, tests, everything. Whatever you need for JIB and CIB, you'll get it over here. So download it right now. Okay. Now let's come to the questions. Now it's a question time. Now I have spoken up till now. Now you'll have to speak. Let's see. Okay. Let me have some water by the time. You just read this question. Yeah. Under COD terms, what is COD? Cash on delivery. So under cash on delivery, the seller extends credit to the buyer on open account. Extends credit to the buyer subject to the bank approval. Requires the buyer to make partial payment at a fixed intervals. Bear the risk of buyers refusing the goods shipped. What is the answer? What is the answer? Yeah? Okay. I'll give you a simple example. Let's say you shop on that online shopping nowadays. Everyone does that online shopping now. Myntra and what, Amazon, anything. We do it. Suppose there are 3-4 terms, payment terms over there, right? Credit card, then UPI. There is also a term called as COD. Under COD, what happens? In COD, what do they give you the option? They give you the option to pay when you get that courier. Now, if you get that courier, imagine yourself only in this place. You get the courier and you don't like that good at all. Whatever, or your mind changes in between. Means you had courier asked for that courier some 5 days back, but in 5 days something has changed in your life. So you reject that goods directly, those goods. So will this happen? Yes, this can happen. Your house is locked. You shift the city. You go outside, your company sends you on some transfer before the goods arrive. What will happen? So the seller bears this risk, right? So the answer is D. The seller bears the risk, right, of buyer refusing the goods. Obviously. What is the second one? When a firm needs short-term funds for a specific purpose, the bank loan will likely be a short-term funds. Now look at this. This is the basic of your banking. So revolving credit, transaction loan, line of credit, none of the above. So short-term funds means what? I need it for 3 months. Some special order I got it, or some 6 months, 1 year, max to max 1 year. So if I'm having some funds which are required for 1 month for 6 months, so these are short-term funds. So which is this method of funding for some short-term funds? It is generally, okay, let me ask you, what is CC? Cash credit. Cash credit is short-term fund or long-term fund? Your answer lies here only. What is CC? CC is the revolving credit, OD type, right? So any short-term funds are always given on a OD type loan, right? So that's why it is revolving credit. That is the main answer. Revolving means, what is CC? CC is the revolving credit. Revolving means what? Suppose if I debit, let's say 1 lakh, I am having a CC limit of 1 lakh, okay? Now I take out some 50,000 out of this. So my limit remains only what? 50,000, right? So minus 50,000, remaining 50,000. Suppose if I input deposit, let's say 25,000 in this. So my limit becomes what then? 50 was earlier, now this 25 plus, so 75,000. It goes on. That's called as revolving credit. Okay? Before going ahead, subscribe to Officers Adda 24/7 YouTube channel. In this channel, number 1, you'll get the latest updates on JIB and CAIIB. Very important. And second one, you'll get a free YouTube series on all the subjects of JIB and CAIIB. Free, free, free. Grab it fast. Whatever is free, grab it fast, isn't it? Click on that bell icon, click on the subscribe button, do it fast, okay? Let's move on. Inventory is in possession of the third party under which of the following methods? Oh, possession of a third party under which of the following methods? Third party, lien, warehouse, receipt, mortgage, or trust receipt. These are the basics of the funding actually, okay? These are the basics of funding in trade finance also. Trade finance has all these questions. How many of you have handled warehouse financing? Warehouse. Just type yes in the comment section if you have handled warehouse financing up till now. Anyone? Warehouse financing. Right? Correct. Some of you are typing yes here. The answer is warehouse receipts. Why? Because under warehouse financing, what happens here? This is a, let's say this is a farmer. Okay, farmer. Why farmer? Trader, let's say. Okay, this is a trader of, let's say, grains. Okay, grains. He has a wheat. 5 tons of wheat. or 500 tons of wheat. 500 tons of wheat. Can't a trader have? He can have. Trader can have. If it's a big trader, 500 tons is nothing. So this trader, what will that trader do? He'll keep it in some government godown. Government godown, okay? Godown. He'll get the receipt. This government godown will give a receipt, okay? This receipt, let's see, these 500 tons are with me. This receipt will be submitted by the bank to the bank, okay, by this trader. He'll submit this receipt to the bank. So this bank will, based on this 500 tons government godown over here, that bank will finance this guy. Finance, okay, funding. Finance, I'll write it. So this is known as warehouse financing. So that's why, where are the goods kept in this? The inventory is kept in third party godown, right? Government godown. That is the answer. A formal legal commitment to extend credit up to certain maximum amount up to a stated period of time is called as. Here, formal legal commitment to extend a credit up to some maximum amount over a stated period of time. LC, revolving credit, line of credit and trade credit. So the answer is, some of you might not have handled these products up till now. Even I know that. Because we are in retail banking, we don't handle all these products. Here, the answer over here is, let me see how many of you can guess. The answer over here is line of credit. Correct? This is line of credit. What is line of credit? Okay. Suppose I am SBI. Okay. What am I doing? I get a client called as Reliance. Okay. This is generally extended to big clients. Line of credit is not to any shopkeeper. Never. Big clients. Let's say Reliance comes to me. So Reliance will have all that security, everything will be adjusted. Now what will SBI do? SBI will sanction a line of credit, LOC, line of credit, not line of control. That is between those soldiers, border area, not that. Okay. Line of credit. So SBI will sanction this line of credit of, let's say, 100 crores, 100 CR. These figures are very big under line of credit. They are not 1 lakh, 2 lakh, 10 lakh or 1 crore. Higher. 100 crore is very less amount, I told you. It's generally in the terms of 1000 crores. So SBI will sanction, let's say, 100 crores to Reliance. But under these 100 crores, where will this 100 crores be sanctioned as? Means under what term? Will they be sanctioned as CC? Will they be sanctioned as term loan or whatever? So SBI will tell this Reliance, say this, I am sanctioning 100 crores to you, and out of these 100 crores, see, these are the 3 loans which I am giving you. One is CC, let's say 30 crores. One is that term loan, let's say 40 crores. 40 CR. And then let's say pre-shipment credit, pre-shipment. Okay, pre-shipment. Let's say again remaining 30 crores. So this is known as line of credit, this complete sanction, and these are known as sublimits. Clear? A type of collateral generally used for secured short-term loan is secured short-term loan, secured and short-term. So inventory or receivables, real estate, machinery, none of the above. Okay, where do we give the loan for real estate? Means home loan, let's say. Real estate means what? Home loan. Simple term. There can be other loans also under real estate. I am giving a simple example, home loan. So home loan is sanctioned as what? Have you sanctioned any home loan as OD? No, term loan, isn't it? TL. Similarly, machinery loan. Have you sanctioned any OD for machinery loan? Never. We always sanction it as a term loan. So short term loans are always sanctioned as inventory under, means the collateral is kept as inventory or receivables. CC. Understand this? CC. What is the collateral for CC? Stock, debtors and inventory, right? Stock and inventory same. Stock plus debtors minus creditors. That's the way, isn't it? Which among the following definitions are wrong? Beneficiary, the company or the individual who will receive the payment from the bank. So what did I say? Beneficiary means seller. So seller will receive the payment. Is it correct or not? That you have to decide. Issuing bank, the bank which issues the letter of credit to the seller party. Advising bank, the bank where seller wants receipt of payment Bank where seller wants receipt of payment and all of the above. Now we want wrong. Okay, we want those which are wrong. So beneficiary is correct. He will receive the payment. So that is right. Issuing bank which issues the LC, that is also right. So two are right and only third one is remaining. So advising bank means where the seller wants receipt of payment. What is this wants receipt of payment? Seller doesn't have to do anything with receipt of payment with the advising bank. Advising bank's job is what? Forward the document. Two jobs I told you. Check the authenticity, forward the document. So this is wrong and this is my answer. Right? So which of the definitions is wrong? This is wrong. Okay? The bank with which credit is available to the seller is called as delegated bank, nominated bank, any bank, none of the above. Let me see. Okay. Just now I gave you that example. Confirming bank and negotiating bank, when they are named in the LC, they are called as the fourth bank. What was that? Correct. Nominated bank. Correct. Nominated bank. Very good. If no bank is mentioned in the credit as nominated bank, then penalty can occur. All banks are nominated. Cancellation of LC and none of the above. Means what? This issuing bank has issued the LC to the seller. See this. This is the buyer. This is the seller. This is the issuing bank. Okay. IB has issued this LC and it has not mentioned any name as nominated bank, that whom should the seller submit the documents to. Not mentioned anything. So this LC has reached this seller. Now the seller will submit the documents to whom? No name is mentioned. So all the banks are nominated. The seller can submit the documents to any bank of his or her choice. When there is no nominated bank's name mentioned, then every bank becomes a nominated bank. Okay. Which among the following is correct about the revocable in the LC, letter of credit? Revocable means what? Term revocable. Buyer and issuing bank that establish the LC can manipulate the LC. Any corrections made without informing or getting permission from the seller. All LCs are irrevocable. Means type of LC is obsolete. Okay. Means type of LC means revocable type of LC. So revocable is obsolete. So which one is correct? All of the above. See here, we want correct. So which one is correct? Buyer and issuing bank can manipulate the LC. Manipulate means make changes. So that is allowed. Revocable means, I'll give you the definition. Revocable means this issuing bank can make the changes in that LC anytime it wants without the consent of anyone. Forget this buyer, forget this seller, forget this advising bank. No. Whatever issuing bank wants, they can do it. So manipulation is possible. Any corrections made without informing or getting permission from, that is also possible. So the answer is all of the above, and all LCs are irrevocable. So now, before going, let me show you these batches. Okay, remember the batches which have come up. Hold on, we have one second. Just I'll show you the batches over here. One second. Yeah. So this Sankalpa batch. Join this Sankalpa batch immediately. Why? Exams are near, number one. And you might have seen in today's lecture, things are not that easy. LC, these all trade finance. This is part of your module A. They are not that simple. So join it immediately. And we are having some special codes going on, discount offers going on. I'll show you those. Okay, let me go to Adda 24/7. Okay. If you are having the app, I would always suggest you to go through the app. In the app, you are getting 1% extra using the coin system. Okay. So let me show you. Let's go to Adda 24/7. Let me, yeah. One sec, here. Say this. Okay. Go through the app always. In the app, navigation is very easy. And you get 1% extra also. See this, click on CAIIB November. Okay, clicked. You will get the details over here. See this, the net is slow over here. So that's why it's taking some time. So click on this Sankalpa batch. Okay. Once you click on this Sankalpa batch, you will get the details. Read the details thoroughly. All the details. Read them thoroughly. See this. Product highlights, then expert faculties, interactive classes, importantly recorded videos. It means what? Suppose if you miss out on something, you can definitely get back. See this MP80 code is already applied. So you need not apply anything. Click on buy now. That's it. Click on buy now. Now the code need not be applied. It's already applied. Click on continue. Pay the details. Fill the details. Pay. Make your payment. What is the payment? See this 23,999 reduces to 4,799. 80% off. Go for it. Similarly, you can buy the Mahapacks. Mahapacks means multiple batches. Too good. Join the Mahapack immediately. Join the Sankalp batch. Join the Mahapack. Okay? Because exams are tougher. Remember, they are not that simple. I'll be back tomorrow with another.